All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for January 31st, 2022. This weekend, we talked about, potential sharp turnarounds today. We took a look at some of the sectors and targets. We're going to see some good trades in Tesla and tech. Here is one I took in the financial disruptors this morning. This is in Robinhood. This was the most beaten down of all the financial disruptors. I have an account with them to trade crypto. Pretty good broker. So we had a harsh sell-off this morning, the usual way. Morning hook. There's the RL10. There's the crossing of the baby dragon. There's a re-entering of the floodplain. There is the price taking out the PSAR. It happened simultaneously with the PSAR flip. I was torn between using the tight stop at the dragon and a tight stop at the RL10. So I just split the difference, which was a 20-cent initial risk with $400 at risk. I'm able to buy 2,000 shares. Winter turns to spring, takes out the previous Z3 pinch, doesn't fail, starts moving up by a second position. I'm tracking the PSAR the whole way up, take the sniper exit, capture $1.30 a share on the first position of 2,000. That's $2,600. This reentry micro failure was a little slow getting back in, but I wanted to see it get above the hump of the dragon. That one pays about an R. Pays for all the round trips and whatever. So that trade pays for the foundations course. Standard pattern, standard work. Based off the standard frames that we talked about this weekend and how to organize the combination of daily and intraday trades with hybrid trading. So let's take a look at the market. So last week we were stuck in the chop, basically in this little cluster, and we said, well, it'd be nice if it could get through the dragon, which it did today. It had a little bit of a gap up and closed at the very peak of the day. So this feels like a move. The price takes out the PSAR, so we would be entitled to call that a supported spring crossing. I don't think anybody would disagree that that's a harsh winter. There's the bottom of the RL10. There's the crossing of the baby dragon. Winter turns to spring. No, or I'm sorry, it'll turn to spring tomorrow. It stops at winter right here. But this is one of those where the price was so strong that the price has already accelerated past the dragon and hit the PSAR before the RL10 has crossed. And so we will see Chi Wing Chong took a number of swings based on his frames on the hourly breakouts. And so we're going to see exactly how the hybrid multi-time frame, multi-lens analysis works. Many of his trades, he could have just closed this morning as intraday trades and been very, very happy. So we've the 3-period haul has reversed. The steepness of the RL30 downward has begun to decline, so it's starting to roll over. The PSAR continues to move down, but this is where that's where the price violated it today. We are within about $9, which is about 2% of the 10-day high, which happened back here. That's also coinciding pretty much with the Bollinger Band mean. That's what's remaining of the reversion to the mean trade from the bottom of the sellout, which got all the way down to Z3, which is an abnormal move, and which has basically almost got to Z4, and which is now moving back to the Bollinger Band mean. It's another $15 to the long-term fair value, which is this RL270, which coincides with the far side of the river at 475. And really the peak of the dragon, let's call that 475, all part of the same thing. The all-time high was this 480 and some change. The peak of the RL10 overshoots that a trifle here, which is at about 480, called 481. And then that's really where this thing is free and clear. And we will have left behind all memory of this 12% sell-off. The current size of the sell-off from that all-time high remains at about 6.22% from the all-time high to the current price. Here we're closed at 449.91. So cautiously optimistic. We are still in volatile conditions. We are into sideways volatile, which favors the intraday trade in either direction with no directional bias. So although we do have some positive signs from today, we're mindful that that's what you get in exactly this kind of market. And we will remember that all of last week, we had multi-directional trades or bidirectional trades, alternating ups and downs. And so we're not out of the woods, but this one had some promising gains and guys were willing to hold that overnight. So I take that as generally a positive sign for tomorrow. Wouldn't be surprised to see another strong follow through right from the open. And what I'm going to advise Chi-Wing Chong on is that if his swing trades all gap up tomorrow morning, which would not be unusual, that he should consider carefully making bank on some of them based on his financial objectives and what his targets were. Because if you get a good gap up and then starts to stall and starts to fade, that's still a pretty good day and a half in the market for those swings, particularly in Tesla, which was up like 10% today. So give that some thought as you revise your estimate of what you want. That's a good problem to have, though. Right. So in the sectors today, we had the S&P kept motoring right along for 1.77. Better than that was all of the speculatives. You had emerging markets up 3.2, the Q's up 3.2, and the Russell up 3%. Diamonds had a pretty strong day at 1.13, and only the treasuries in our 6 prime indexes were down. They were off a half. All right, let's look at the good news first. We'll see which ones were uber strong today. We had Bitcoin Trust, lumber, tech, Mexico, all up between 2 and 2.5%. You had the blended large cap crypto, 2.8. Wheaton precious metals, 3 1/3. Consumer discretionary, 3.85. That gets a big boost from Home Depot and Tesla, by the way. Lithium, 4.5. Marijuana, 5.36. S&P Biotech's 5.6, the FANG's 5.8. When all of those mega large caps are up almost 6%, there was some serious money being slung at the market today. And that's why an additional follow through tomorrow would not be surprising. But I would still remain calibrated. Blockchain 6%. Ethereum, Arc Genomics, Moonshots, Arc Innovation, Clean Energy, finally coming out of the doldrums. We talked about that one over the weekend too, 9.37. And then the financial disruptors for Target, Robinhood, Squarespace, Tesla up between 10.5 and 11. So no, you got all of the financial disruptors today: Robinhood, Squarespace, Coinbase, PayPal, all doing very, very well. Tesla 10.6. It went from 840 to 940 today. That's a lot of money. Coinbase and U.S. Steel. So the metals started coming back somewhat today. There's U.S. Steel at 6%. That's one that Wang Chung got a hold of at the end of a sell-off. So really good turning point there. PayPal 5%, Cliff 2.9, Apple 2.6. So all of those in pretty good shape. And that's a pretty broad base of support for today's buying. That looks like not just targeted indexes, but that's also individual companies. All right, let's look at the things that underperformed. The other lumber, only 1.6. Bitcoin Trust, Brazil, XLB 1.5. Finance and oil, 0.8 and 0.9. Commercial real estate, 0.5. Oil exploration, 0.5. Staples and energy, blended commodities and agriculture, all between 0.5 and flat. VIX down 6.6%. And now we'll see that U.S. Steel was kind of the anomaly because all the other industrials underperformed. You've got Devon Energy off 2%. TX and Alcoa, the metals, 1.9 and 1.24. John Deere only up 0.68. Microsoft underperforming at 0.88. So in the Apple versus Microsoft, you had Apple at 2.6, but still not quite as good as the Qs. So there's that. But it was better than Microsoft. So I think there's a broad base. I would continue to look at the disruptors as a mad rush north if I'm playing short term. Yeah, Ken H asks end of month rotation. I mean, that could be. I think more likely is it was a Monday after a 12% sell off at the bottom of the trend. There was a 12.5% sell off, and it was 2% below the 200, and more likely the word went out, okay, time to buy. You're buying America on a 12% sale. And you're seeing very broad support in all of the things that prop up the S&P, like the FANGs, tech, pharma, materials, even the disruptors get on board. So that seems, I think, more likely than sector rotation, although certainly there's some of that as well. Yeah, and Chi Wing says, thanks to Ken H for the XME trade frame. And again, if you guys aren't taking advantage of Ken Hum's good work, then you're not lazy enough to take advantage of the work of others. That's what I would do. Just saying. All right, let's take a look at the daily report. I want to make sure I remember to record, so that's good. Okay, so we move back up into sideways volatile today. We are within 2% of the 200-day, but we also remain volatile. So this, again, no directional bias, but expectations of larger intraday ranges, which can turn on a dime. There was a improvement across the board, obviously. Now only the 30 and 90 are below the midpoint. The 10-day and the 2-day both got stronger here today. And the 2-day obviously doing very well. So yeah, we just nudged back into sideways at 1.6% above the 200-day moving average. The risk C is warning us about complacency, but this is at a natural turning point where the last time we had a strong swing started from exactly these conditions. So we're going to be available to the upside if it happens. But at the same time, we're also mindful that the downside move is always one news event away. The Min Pains, McDonald's, American Express, that's just been crushing it in the finance, by the way. Johnson & Johnson and Home Depot. So Home Depot benefits from that and contributed to the strength in XLY. ExxonMobil continuing to do well in the energy space. No signals on the overreaction and channeling as we approach the 10-day high. Lots of dojis today in the Dow, and still plenty of auto framers available, and some good companies like Boeing and CAT at better than 4-1, and Cisco in the tech still got plenty of room to gain. I think Intel's probably a sleeper too at 4-1. In the ETFs, really just the auto framers in terms of patterns of real interest. This is a warning. This is a warning about Brazil. When you see the overreaction short, that means that prior to its recent outsized gains, it has been extraordinarily weak, which you can see when you bring this over. You start looking at the 6-month and the 12-month, it's among the worst performers, but it has really rebounded well the last 10 days and 1 month. So what that overreaction short signal says, if this is just a dead cat bounce and you start seeing the market roll over and Brazil rolling over, that there's a lot of structural weakness that made this a laggard before. So be mindful of that. By the same token, I would take clean energy as an easy and obvious short if we start seeing collapses in the market in energy. So yeah, today was a 9% gain, but that just makes it a dead cat bounce if tomorrow we see the resumption of energy selling and clean energy selling. So let's be mindful to that. But otherwise, oil continues to do well, as does the energy sector. Auto Framer has a ton of goodies to choose from. Here's the framing data for those of you that are looking to learn how to do just mechanical swing trade framing on those symbols that are better than 2-1 on a return to their 10-day high. Okay. So silver and gold at the top of that stack. Ones that stand out to me, I guess I would say materials. I always like trading them. But I think Caterpillar is also now that it's above the magic number of 200, great American company, that might be ready to go. And JP Morgan and Home Depot, I just think that the finance sector is starting to turn, but Morgan and Goldman are both lagging behind. So, and there's Goldman right there too. So those would be the last two banks in the world to fail. In the daily squeezes, interestingly, Home Depot is squeezed and Microsoft. Those would be the two that I would really be ready for an expansion move. So I like them for that reason. Still being dominated by the winter. So this is a reminder that we're not out of the woods yet. Although we did have some that rolled over and entered the spring in the Dow. And Microsoft is especially of interest to me. And Apple for that matter. And this one, American Express and Finance has just remained in the summer and is doing good. So that may just be the leader in the finance sector coming out of this. If the whole finance sector turns and American Express continues to outperform, boy, that could really be an amazing move. So keep an eye on that one. Lots to choose from for winners today. The easiest ones to see: Apple, McDonald's, American Express. Again, we sort this by the 10-day index. That's based on where they are on their 10-day trade frame. So Latin America, Brazil, oil, tech, and energy. Even the Dow's been doing pretty well. So I think that's where I'd be looking. Nothing else much I would say on this one. We can see the, that nice rebound from this support level around 430 is holding nicely back inside the river. That's a good thing. And you can see that the slope of the RL30 starting to try to turn, and if that just comes back to the midpoint, there's a really nice, another 5-6% move in there. All right, let's look at the trades from the boys today. Guys did some really good work in there today. Makes it easy. Making it easy for me here. All right, here's Ben. Maybe not trusting the PSAR enough or insisting on trading in the chop. This is a fake one and go to, but it is late in the day, so I don't mind that you don't get that one. But when you get that super pinch like you do here, it's not unusual to see fake one, which you got, and then that stop and reverse in here for the next big move for the big finish. Not unusual. This one, this hybrid frog off the bottom, quick exit, quick short and exit, and I get a second stop and reverse, I think is how I'm reading that. Oh, no, so this one was long and quick scratch, and then a re-entry after the rebound, and then rode that up pretty nicely. I don't mind you getting paid here to cover for that first one, but that wasn't even testing the dragon, so there was maybe a little more room in that, but you didn't give back that much. After this settled in and started to resume, quick scratch, quick scratch, quick scratch. You're not giving it any room to work at all. So trade smaller, trade slower, take time in between your trades. And this is where, if you try the Wu-Wei exit, you can't trade that fast because you're waiting to see actual confirmation that the trade's not working. Now, after this great big move up where it hardly failed at all, you get this PSAR flip. Now, this is possible. This is okay. That's okay. I'd like to see you get this one. I still think that one's, you'd end up scratching, but I'd like to see you see that as that's a failure to fail. It did not come back to the VWAP. The fact that it reversed quickly gives you like a COTA 2. You have a low in the dragon, a higher low, rejected. It did not fail the VWAP. I'd like to see you take that one, even though it scratches. And then this is just too many trades in the grind. But that's a good shot, and that's the one we want. Still you got paid to learn today, and that's a pretty good day at work. It's like being a paid intern. Here's some stick time with Mike. I think find the mover. When it was moving, it was here. I don't mind this short, and this should be your stop and reverse though. When this thing has already had a huge gap up and the whole market is working, and it gives us this 1, 2, 3 quick fail and starts to reverse, I'd like to see you maybe get in a little earlier. That gets paid. That's good. The chop was not much of a loss. Although now you got mentally tired and then missed the 2 that paid. More chop, more chop. Keep taking the shots. This is a late re-entry. It got paid 0.8, but when this doesn't fail, you should be long here, and that gets paid even better. Again, fake 1, go 2. Still getting paid to learn the techniques. Nothing wrong with that. So this is in the topic of find the mover. Here's 19R down under. Good scratch, good stop and reverse, got paid. Good reentry, got paid for 2.5. Got paid a little bit. We're the stop and reverse. How good is that anymore, Luke? Stop thinking, just trade. Now this is where he's noticing the Z3 pinch. And by this time he's got, if that's his wrist box, he's got 1, 2 in hand, 3 in hand almost, with momentum. And it's a new high of the day and a breakout from Z3. Why not? And this one is a Z3 excursion. Why not? This one holds, so he gets his second position here. That's pretty good. He's got a nice tight stop, and that gets paid 15, and that could have been 25 without being even really greedy. Great stop and reverse, good discipline. I love that he is able to take the short side of the trade after getting plus 18. He still is mindful enough to be able to take 2 shorts in a row. That's more characteristic of currencies, which tend not to, run away forever. So pretty nice work there, Luke. Tentatively optimistic about getting the second positions in. So we like that one. Arch, also good work down under. Working nicely with Luke. Crocodile River, Z3 pinch, gets the breakout, re-entry, gets, oh no, wait, this looks like, what is it? Was this going short and then covering? Stand by. If that's the case, make that first arrow red so we can see what direction you're taking. This is good practice over here, because now he's taking a look at the keeping track of his stats by pattern. This, I guess, was this getting short here? Not sure why. That looks, I mean, that would be a natural place to try to re-enter here. Not sure. Yeah, so I'm not understanding why that is a failed trade. I understand why this one gets paid because it's green buy and a sell. If that's a sell and this is a cover, that should be a positive trade. This looks like maybe took half the trade here and half the trade there to get paid. Here was an opportunity for a second entry. Would have been about the same place that Luke got his second entry at, was up in here. So study his markup too. Really nice work here. Yeah, this is getting paid to learn. Nice work. Oh, I see. Actively taking 50% snipers at 2R. Okay, got it. And not adding to positions. That's okay. I could read the whole chart, staring me right in the face. Good work, Arch. All right, this is US Steel. This is Joe. It's Joe because I know he keeps his guidance to himself front and center. Is this a critical state? Well, is it? Here's the first gap and go. It holds. Now he waits to see support. Support at yesterday's VWAP and the gap. He sees a peak. Higher low. Entered. Really a 1, 2, 3 entry. That's nice. Doesn't even have to wait on a PSAR price break. Uses a standard risk box, even though that's lower. I want you to see that's even though that is lower than the RL10 and the PSAR. As a standard risk box, that looks like at about 20 cents. So he's using a MMRB, just a standard of 0.20, which feels good. So he gets, from his maximum excursion, he plays a sniper to lock in 2, stays out of the chop, sees a fake 1 and go 2, gives back almost an R, but still that's pretty good. Fake 1, go 2. There it is. What makes that easier to believe and see in is the fact that this is all happening north of the VWAP, and you've got a rising RL270. So this little fake doesn't even get through the VWAP and recovers. That allows you to get that early on. And when the price move is only that big, giving back 1 is not really that bad because it's only a 1, 2, 3, and you're getting paid for that. So that's a nice 3R. So he's at almost basically at 70R for 155 trades. That's about a 0.46 expectancy. Pretty good. All right, this is the S&P on what's this, on 1 minute. So here was the open. There's a low, a higher low. We might have been able to get this. If you put the dragon and the RL10 in there, you'll notice those kinds of buy on dip and Kata 2s much easier. And then I don't know where your risk box is, but I would say either underneath this, let me clean that up. I would say if you're getting it here, I would not be that close. I'd be like right there or right here, depending on risk. I would prefer this one because you're right at the Bollinger Band mean. And you're saying, look, if this thing breaks the Bollinger Band mean, then that run is over. So the Bollinger Band mean, a failure below that invalidates the hypothesis that this is going up. He's just trailing with a 0.7 frog box. So this is just automatic. And now he's got a Z3 pinch. This would probably be a super pinch. This was that fake 1 and go 2 we saw in some of the other moves, but that's pretty good for an automatic trade. So some areas that if you're looking to be a little discretionary, when you see this kind of sideways chop, and then you get that Z3 breakout, those are areas that naturally occur to me. So like here, I probably have been tempted. Here, I'd have been tempted. Not much would have come from those, but you don't always know. I mean, like sometimes they look like this, and then the breakout gets rewarded in a big way. But you're more likely to see that in the morning move. And then you can see how each little subsequent breakout is diminishing as the waves get smaller and smaller. That means there's no new buying energy coming in. That means all of the energy was coming in here. Now, that's why I'm concerned about tomorrow, by the way. That if all of the big money voted once and for all, just with this one, the explosion of this energy is what pushed it higher. Now, if there's no new energy to come in tomorrow, then there won't be much more upside. And then if this starts failing, then all the guys that bought over here are looking to lock in their gains, probably around 444. Because if they were buying down here at 435, that's a plus 2.5%. And that's a move that you would want to maintain on a 1-day move. So that's why you have to be concerned about the other side of the trade in a sideways volatile market. But pretty good work here. But I would say look to add the other elements of our framework so you can start seeing some of the other patterns. And then if you're going to do frog boxes, draw the box. And then what I would do is after when you would draw your box, if that's the size of it, then you can see from those highs where the lows were, and to see what the pattern of the trailing stop looks like. So you can think about if that's a good stop or if you want to be closer or further away. Wojcik with the oh, that's this trade up in here. Here's my trade right there. A low, a higher low, and or even a Z3 breakout. This was so favorable that you kept it no lose plus dinner for 2. But yeah, as soon as this starts failing again, at least here, but maybe even here, at those 2 price levels, we could have been short instead of waiting for all the way down here and then getting smoked. Good patience, though, to wait for the PSAR breakout. Great exit. This is either here or a 1, 2, 3 or a PSAR break. Any one of those gets you paid on this move, and then your exit is here on the PSAR break. So plenty to learn from. And since you're also trading the Aussie on the 5 minutes, study Luke's chart. Study it. You guys should have a little interest group going. Here is the S&P. Following rules to the letter. That's fine. I like this one. This is the PSAR break. The fact that it doesn't get through the VWAP makes this a great cover, but then I want you to get long right here, because this was failure to fail. If this was going to fail, it would come back into this cluster or all the way down to the 270. It didn't do any of those. Didn't violate the VWAP, didn't violate the previous support level, didn't go to the 270. That means it's going up, and now you get an entry here instead of here. And that would get, if that was 0.2, then that move would give you about 0.8, which makes this a winning day. I like this effort here because you got a high, a lower high, you try short, you held all the way. I'd be tempted to just stop and reverse there. And if you're using the Uwe exit, you end up staying in this thing a long way. Stayed out of the chop, that's fine. This is the fake 1 and go 2, so you got paid a little bit. So with just a little bit of tenderness right there, looking at the failure to fail further. Failure to fail is information. So if it's not going to fail, it might just go up like it has been. Find the mover. Let's see. This is Mustafa, I believe, is working a set of precise rules. And he's getting paid in nice even chunks. He's getting paid on the steps up. So that's 2.9, 3.6, 4.2, 4.9 before he takes his first loss. So there was more room in here. That's the one I'm concerned about. There was a nice chunk available. And then I want you to notice that you can trust your PSAR. That entry from here, I mean, look what this one does. You're getting a great entry. And if you take that as your risk box at the PSAR, your Uwe exit stays here until you get 3 dots above your entry, which is 1, 2, 3. Then you move your stop to here until the Bollinger Band mean picks up. And you get that whole move from here, which is 1 risk, 1, 2, 3, 4, 5 on the first trade. And that's not even getting any of these other additional trades. So the result is pretty close, but I would also begin to appreciate the power of the PSAR. Now, it may be that you're using the PSAR to just give you a directional bias and say, as long as that thing is up and I'm not violating it, you're ready to keep taking these recovery moves. And that feels pretty good too. So whatever you're doing, that's working. Stay with it. Here's another 2.3 following his rules. So he's at 6.6 for the day. And here's what I also like. He was in an annoyed borderline mood. So he felt like he was on a C day psychologically. But even when he feels like a C, you should still be able to make money and go to work. I don't have to always love my work above all other things if I'm working, for a living. There are tough days at work. And then I would just say, here is your SSC. Here is your CATA 2. Whoa, man. There may have been 20 available today. Looking to get short here on the breakdown below the dragon and the PSAR. Waits for the full PSAR exit and with a stop and reverse. Unfortunate. We might have taken at the best you could have gotten a 1, 2, 3, but that doesn't make much difference. I just like that you didn't lose and you got back on board right away. This time you're a little quicker to get out, but then you still re-entered and got paid. I like the short. Now notice on the short, you're willing to let it go all the way back. Unless that means you really got long in here. I don't think that's correct. That one you tried here and that's still fine. Good scratch. Good scratch. Got paid. I like the short. So break even and learning the patterns. I think this is Van's. Yeah, Van Miller. So this is a big step. Trading 3 minutes. This is good work, Van. This is all manageable. I know how much of a stretch this is. Here's some chain trading. So gets paid. He notices that his you're gripping it way too tight. This is a nice let it run. There might have been a little bit more and getting caught up in the chop. Unless I think we may have already seen this one once. But if you look at your max favorable excursions and how much you're giving back, I think if you trust that PSAR a little more, you're not going to get ground up as much in these two areas. Relax a little more. Maybe if you see how much space you have in here, that makes this really hard to see. So once you're well past this, make that the bottom of your chart, and then this whole thing will expand, and it will give you more playing field to contend with. But you got paid to learn today. Pretty good stuff. We're going to see some swings from Chi Weng Chong. And again, these are the ones where, he had set up the multi-time frame charts over the weekend that we looked at. And so his mechanical entries were basically above the previous day's high. So he can think about getting long already around 158.50. So you see, that's what he's doing in here. And then he's got this entire move for the day that closes well. And so when you take a look at the gains that you have, even the swing trade is almost an R in hand. Now, if you have a turbo component in there, especially since this is a Z3 starting to expand, you might have been able to trade. Let's say if you had 1,000 shares and you wanted to keep 200 overnight, you could buy 1,000 shares here, and then somewhere in here, offload 800 intraday, carry a smaller position overnight, get paid really well on 800 shares, and that gives you money in the bank that's not at risk. And then tomorrow, if this continues going on, you just put the 800 back on, and now you carry no risk on the 800 shares that are turbo. Notice how that same logic could have also worked last week on Friday, when you had on the hourly charts the higher low, and there's a CATA 2. So you could have actually been long from here, cashed a winning position, kept 200, and then put the 800 back on here, paid for with the gains that you'd made on Friday. So you can actually start making money intraday, make bank, take that out of the market, keep it in your little bank, and then look to put it back on. As long as this thing keeps working to the upside, it's got to get through this cluster now, which it is just about poised to do. And then it's got to get through this cluster, as you've noticed, and then it's got to get to this cluster, as you notice. So a move up to 170 is not irrational. And that could be 2 more good days of moves, just like it did today. So nice work. And we're going to see, I think, the same idea in Tesla, only even better. His entry's at 870 and it closed at 940. So that's a $70 gain on a $40 risk. Because that's like, he's locked in 1 R at the red line, and he's holding about an R and a half. That's going to go tomorrow, I think, because Tesla is going to be the leader of the Brave tomorrow. That's good work. Squarespace, same thing. This is that same trade that I had with Robinhood, but in the other financial disruptor. And he had noticed the double bottom. He buys it in the turn right in here and gets paid for all this, locks in the 1R, and now it's already above the previous RL10. So the next spot is up in here. That's not irrational. That's a 1-day move in Squarespace. And then if you come back over here and look at where this thing is, there's a lot of true believers that knew that this was going to happen finally. So it can get to 150, 170, 190, 210, 230, all the way back up that price ladder. So this is like a cup and handle, but you're getting well entered in here and ready for that retracement. Now, it should take longer to go up than it took to sell off because life, but that's in good shape right there. PayPal, same trade. PayPal actually looks a little better than Square because it only had this little solid, whereas Squarespace was straight down the whole way. PayPal they've been trying to hold it here. So now the trade is to 190, and it just broke out above today, and he's locked in 1.2R, and the next move is up here to 178. So great shape. Finally, US Steel. What we liked about this one over the weekend was that all the metals which had sold off harsh had like multi-days of support down here. They all were in that condition. So we were ready for the breakouts above, and you get this whole move, and he's locked in 1.2. I think this one is destined for 23. That's an easy one-day move. If we get some more juice tomorrow, I'd like to see the other metals join it. But US Steel is the leader out of the clubhouse in the metals. So really good work today, guys. That's over 40R you pulled out of the market with really good framing. And what I'm most pleased with is that no losses greater than 1R. Very tight, controlled risk, measured risk, managed risk, taking the opportunities, trading with discipline and endurance. This is good, in good shape. Keep up the great work, and we shall see you tomorrow. That's what I think.